Okay, good morning, everyone. Thank you for dialing into our webinar today. Welcome to the Bursa PLCs Investors Relations Series number 10. The title for the webinar today is Navigating Bursa Malaysia's Enhanced Sustainability Reporting Framework. Our speaker for today will be Michelle Todd. She's the Senior Vice President of Corporate Governance and Sustainability under Regulation at Bursa Malaysia. Michelle has 28 years of experience in the Malaysian capital market and has held various key positions in Bursa Malaysia, covering areas such as index development, issuer services, market data development, distribution, and central repository system. Currently, Michelle heads the Corporate Governance and Sustainability section. This section develops strategies, policies, measures, and initiatives to raise the standards of corporate governance and sustainability for all Malaysian listed companies. During the webinar, Michelle will share with us an overview of what is mandated under the current Sustainability Reporting Framework, which was issued by Bursa Malaysia on 26 September 2022. Michelle will also touch on the resources that are available to assist listed companies in preparing their sustainability statement. Without further ado, let me pass the floor to Michelle. Over to you, Michelle.
Thank you very much, Chen. A very good morning, ladies and gentlemen. My name is Michelle, and I'm from the Corporate Governance and Sustainability section of Regulation, where we develop strategies, policies, measures, and initiatives to raise the standard of corporate governance and sustainability for all Malaysian public listed companies. In this 10th session of Bursa Malaysia's Investor Relations series, I will be providing an overview on these areas: the Enhanced Sustainability Reporting Framework, the ESG Reporting Platform, our reporting framework resources, as well as the National Sustainability Reporting Framework, and some concluding remarks. And so without further ado, let me start on the content. So in recent years, there has been tremendous development and growth across the sustainability ecosystem worldwide. This is largely driven by an ever-increasing demands by various stakeholders, for example, institutional investors, lenders, customers, non-governmental organizations, and regulators. For better sustainability or environmental, social, and governance ESG practices, as well as disclosures by businesses. Apart from the mounting stakeholder pressure, the COVID-19 pandemic has brought to light the ramifications of poorly managed sustainability risks.
Sorry, Michelle. Sorry to interrupt. Can you speak a little closer to the mic?
Okay.
Thank you.
Apart from mounting stakeholder pressure, the COVID-19 pandemic has brought to light the ramifications of poorly managed sustainability risks to overall business resilience and economic growth. Specifically, supply chain disruptions, as well as limited natural and human capital resources, have translated to poor productivity and increased cost of doing business. Furthermore, PLCs also need to contend with other pressing sustainability issues such as climate change, biodiversity loss, pollution, and water scarcity. When taken as a whole, it is imperative that PLCs are able to manage environmental and social risks and opportunities well to enhance business resilience and performance. In Malaysia, there has also been several key developments arising from heightened demand for good sustainability practices and disclosure. The 12th Malaysia Plan, launched in September 2021, is anchored on three key themes, namely resetting the economy, strengthening security, well-being, and inclusivity, as well as advancing sustainability. More importantly, the 12th Malaysia Plan is closely aligned to the Sustainable Development Goals, or SDGs, and with the adoption of whole-of-nation approach in the implementation of the 12th Malaysia Plan, both the public and private sectors are expected to embrace good ESG principles in their decision-making and processes. The latest edition of the Malaysian Code on Corporate Governance, or MCCG, which was issued by the Securities Commission Malaysia Malaysia in 2021 also highlighted the pressing need for companies to manage ESG risks and opportunities. With the introduction of new best practice 4, the MCCG emphasizes the strategic oversight and action by boards and senior management alike. Boards are expected to understand sustainability issues relevant to the company and its business, including climate-related risks and opportunities. Institutional investors as well, in particular members of the Institutional Investors Council Malaysia or IIC, are also collectively championing for better ESG practices as well as disclosures by PLCs. In a clear sign of commitment, some IIC members like the EPF and WAP have become signatories of the UN Principles of Responsible Investment or UNPRI. In addition, EPF also recently set the target for its portfolio to be fully ESG by 2030. In response to the urgent need to expedite and ensure smooth and orderly transition to a low-carbon economy, the Securities Commission as well as Bank Negara Malaysia also established a Joint Committee on Climate Change or JC3 platform in September of 2019 to pursue collaborative actions in building climate resilience across the Malaysian financial sector. Part of JC3's current initiatives include the issuance of the TCFD application guide for Malaysian financial institutions, development of relevant climate scenarios for modeling or analysis, and devising various strategies or methods to make available pertinent climate-related data to facilitate assessment and decision making. Similarly, the reporting requirement for PLCs has also evolved. Bursa Malaysia's Sustainability Reporting Framework, which was launched back in 2015, comprised of amendments to the listing requirement, the reporting guide, as well as toolkits. All main and base market PLCs must include in their annual report a narrative statement detailing their management of material sustainability matters, themes, and that are typically economic, environmental, and or social in nature. Some of the more common sustainability matters or themes include anti-corruption, employee health and safety, energy use, biodiversity, gender diversity, climate change, and human rights.
Sorry for the audio. We will address this. Give us a moment.
So,
Apologies. Can everybody hear me better now? Okay. So okay. Let me just go back to the reporting requirement for PLCs. Yeah. So Bursa Malaysia launched its sustainability reporting framework back in 2015, which comprised of amendments to the listing requirement, the reporting guide, as well as toolkits. All main market and ACE market PLCs must include in their annual report a narrative statement detailing their management of material, sustainability matters and themes, or sustainability statement that are typically economic, environmental, and or social in nature. Some of the more common sustainability matters and themes include anti-corruption, employee health and safety, energy use, biodiversity, gender diversity, climate change, and human rights. Since 2015, we observed significant improvements in PLC sustainability-related practices as well as disclosures. But even so, challenges were unfolding. These include increasing calls from various stakeholders to improve comparability to facilitate benchmarking and decision-making. Observed gaps when it came to availability and quality of certain aspects of disclosure, and overall need to further enhance sophistication of practices and disclosures for critical themes such as climate change and human rights. So in response, Bursa Malaysia undertook a comprehensive review of the framework to enhance availability, quality, and comparability of sustainability disclosures and to satisfy the informational needs of PLC's key stakeholders. Now, since Bursa Malaysia announced the enhanced sustainability reporting framework on 26th of September 2022, which is more than 1 year before its implementation date, with the aim of giving PLCs sufficient preparation time in boosting their overall resilience, competitiveness, and in turn, appeal as attractive investments. Now, there are 4 key enhancements, which include the introduction of number 1, a common set of prescribed sustainability matters and indicators that are deemed material for all PLCs. Number 2, at least 3 financial years data for each reported indicator, corresponding targets, if any, as well as summary of such data and corresponding performance targets in a prescribed format. Thirdly, a statement on whether the sustainability statement has been reviewed internally by internal auditors or independently assured. Fourth, the climate change related disclosures. Now, at this point, we would like to remind PLCs to please read the listing requirements, the actual listing requirements on Bursa Malaysia's website, and not just the news article, which may not contain all the information required for compliance. Now, in addition to the advance notice given by Bursa Malaysia, the enhanced sustainability reporting framework is underpinned by a multi-year phase implementation approach to ensure successful rollout. The main market will continue to include disclosures of EES risks and opportunities covering governance structure that is in place, scope and basis of scope for the sustainability statement, materiality in terms of how sustainability matters are identified and prioritized, and management in terms of how sustainability matters are managed, including policies, measures, and indicators. The listing requirements for ACE market were also strengthened to align with those of the main market. Hence, ACE market PLCs are expected to disclose the same for financial year ending on or after 31st December 2024. Bursa Malaysia also mandated the disclosure of a set of 11 common sustainability matters and accompanying 23 common indicators, which are deemed material for all PLCs, regardless of size or sector. This means that all PLCs must disclose the required information by the stipulated effective dates. As mentioned earlier, one of the main demands of key capital market stakeholders is for better availability, quality, and comparability of sustainability information and data. Hence, this enhancement would ensure that all PLCs would disclose the same set of common indicators across a number of predefined sustainability teams, promoting both availability and comparability along these two dimensions. Within this context, the quality-related aspect will also be addressed by stipulating certain methodologies to derive the data for selected indicators. PLCs are advised to refer to the third edition of Bursa Malaysia's Sustainability Reporting Guides and Toolkits for guidance on methodologies. Now, although the effective dates are staggered for common sustainability matters and between both the main and ACE markets, PLCs are strongly encouraged to early adopt where possible. Okay. The next enhancement is for PLCs to disclose 3 financial years worth of data for each reported indicator on a rolling basis. Now, what this means is, for example, a main market PLC with a financial year ending 31st December 2023 would be required to report data for 2023. Subsequently, for financial year ending 31st December 2024, this PLC would then report data for 2023 and 2024. In terms of performance targets, if such targets are set, then PLCs are required to disclose for each reported indicator. Now, Bursa Malaysia also mandated the disclosure of a performance data table containing a summary of corresponding data provided for all reported indicators throughout its sustainability statement. This performance data table must be generated from the ESG reporting platform and disclosed in the PLC's sustainability statement for announcement to Bursa Malaysia, together with the PLC's annual report. I'll be covering more about the ESG reporting platform in the next section. Now, as the demand for PLCs to provide credible sustainability disclosure grows, Bursa Malaysia also mandated another enhancement, which is on the statement of assurance. Under this enhancement, PLCs are required to disclose a statement on whether their sustainability statement has been assured, and if so, the subject matters and scope covered. In addition, if independent assurance is undertaken, the conclusion must also be disclosed. While there are currently no requirements for sustainability statements to be subjected to an assurance process, the Exchange strongly recommends this as a matter of best practice. You may also refer to Chapter 10 of the Sustainability Reporting Guide, which provides various scenarios of assurance, if any, with suggested statements. Now, for the most important enhancement, which is on climate-related disclosure. The rationale for this enhancement is to ensure that PLCs are more prepared, especially in terms of making the transition to a low-carbon world. This enhancement has 4 targets. Number 1, to compel our PLCs to internalize the consideration of climate-related risks and opportunities with a view to improve overall climate resilience of their businesses. Number 2, to facilitate the informational needs of investors providers of funding, and regulators with regards to their exposure to climate risks, as well as mitigation and adaptation measures put in place to manage those risks. Number 3, to ensure that our reporting requirements are on par with peer exchanges with the view to continue to position Malaysia as a destination of choice for listing and raising capital. Number 4 would be to support the country's national agenda of reaching carbon neutrality by 2050. The current requirement for main market PLCs is to report vis-a-vis the Task Force on Climate-Related Disclosures or TCFD recommendations in alignment to the 4 pillars, i.e. governance, strategy, risk management, and metrics and targets. For the ACE market PLCs, must disclose its plan to transition towards a low carbon economy or the transition plan and include the following 2 information. Number 1, the role of the board and senior management in overseeing and executing the transition plan. And secondly, the strategies and initiatives to reduce climate-related risks and increase climate-related opportunities. Now, as some of you may be aware, that the climate-related disclosure for both main and ACE market must be disclosed in a dedicated section within the sustainability section. As some of you may be aware, the TCFD task force was disbanded in October 2023, and the IFRS Foundation has taken over the monitoring of progress of companies' climate-related disclosures. Many of you have asked whether to continue reporting on this enhancement, and I'll be covering this in a later slide. Now, if you recall in my earlier slide where I mentioned about a performance data table, which must be generated from the ESG reporting platform and disclosed in the PLC sustainability statement for announcement to Bursa Malaysia, together with the PLC's annual report. For those who are not familiar, the ESG reporting platform acts as a repository for disclosures conforming to the prescribed format mandated under Bursa Malaysia's enhanced sustainability reporting framework. With regards to the ESG reporting platform, we would like to remind all PLCs that this is a live platform for regulatory reporting, and it is not to be used as a test environment. This means that you cannot create tests or sample reports, as all reports created on this platform cannot be deleted. The same goes for the creation of custom sustainability matters and indicators. Once created and saved, they cannot be deselected or deleted, which is why we strongly encourage PLCs to refer to the user guides and videos to ensure the correct application of the ESG reporting platform's available functionalities. PLCs were granted access to the ESG reporting platform's user guides and videos via an email that was sent to all PLCs between the 7th and 8th of December in 2023. The link to these resources is contained in the email, and recipients of the email is able to access and download the resources accordingly. It is not accessible to any unregistered email addresses. Now, the ESG reporting platform is accessible via Bursa Link, and PLCs must use the Bursa Link authorized ID to access. For PLCs who do not have their own authorized ID, you will need to apply for one from the Bursa Link support team. Once you are in the Bursa Link page, you will need to click on the announcement tab on the top left. Then you will see the sustainability header, which is the gateway to the ESG reporting platform. At the ESG reporting platform's landing page, users are reminded to please input the correct board and financial year end, as the wrong information or report cannot be deleted once it is saved. Main market PLCs who intend to report only on Bursa Malaysia's common matter and accompanying indicators should select the standard template. The custom template is suitable for main market PLCs who wish to report on additional matters and indicators which are material to them. For ACE market PLCs who wish to report on Bursa Malaysia's common matter and accompanying indicators ahead of the stipulated effective date, will also need to use the custom template. Once you have selected a template and input the correct board and financial year end, you should then refer to the user guide for instructions and tips on completing your report. Once all the mandatory information has been provided, PLCs must finalize the report in the ESG reporting platform, generate the performance data table in the PDF format, and then insert in the sustainability statement for announcement to Bursa Malaysia together with your PLC's annual report. Please ensure that the data provided is accurate before finalizing the performance table to avoid data being marked as restated. The performance data table must not be edited or tampered to ensure the integrity and accuracy of the data, as well as strict compliance with reporting standards. If need be, PLCs may include footnotes that may come after the image of the performance data table and not part of the performance data table itself. PLCs may also provide additional comments and notes in the form of a narrative in the sustainability section. Moving on to this, the resources that Bursa Malaysia offers for all PLCs. You may find all the resources relating to Bursa Malaysia's enhanced sustainability reporting framework in a folder parked under the Resources tab in Bursa Sustain. The first resource is the third edition of the Sustainability Reporting Guide and 6 toolkits which detail the business case for embedding sustainability and provides guidance on how this can be achieved. It also provides specific guidance on the information that should be disclosed when producing a sustainability statement in the annual report in accordance with Bursa Malaysia's listing requirement. In the guide, you will be able to find the listing requirements in verbatim, definition of terminologies to aid user understanding, disclosure guidance with key questions that PLCs should address in their sustainability statement, and selected case studies of disclosures by Malaysian PLCs. The objective of the guide and toolkits is to help companies to firstly appreciate how sustainability can facilitate, support, and drive corporate and societal value. Number 2, improve awareness of relevant risks and opportunities connected to the company's sustainability matters of issues. Identify, prioritize, and manage material sustainability matters so that companies can focus on what is important to its stakeholders and, in turn, create long-term value to stakeholders and society at large. And last but not least, improve the quality and depth of sustainability information disclosed to better serve the needs and expectations of users of sustainability information. This guide is intended for all Bursa Malaysia main and ACE market PLCs. Companies are strongly encouraged to refer to this guide in the course of preparing their respective sustainability statements. The guide has been developed in recognition of the fact that companies may be at different stages of sustainability journey, and preparing the sustainability statement can be challenging, especially for early reporters or smaller PLCs. Essentially, the contents of the guide are applicable to companies at all levels of understanding and sophistication, be it in terms of sustainability disclosures or the underlying practices that facilitate such disclosures. Each PLC is encouraged to apply this guide bearing in mind their own circumstances and in the context of their business operations, i.e. in terms of resources, experience, expertise, and understanding. The second resource is the Illustrative Sustainability Reporting Guide, which serves as an illustrative example of how a hypothetical PLC addresses sustainability-related disclosure requirements under Bursa Malaysia's listing requirements. With the ISR, PLCs will see the incorporation and conceptualization of the enhanced sustainability-related disclosure requirements in a visual manner. It will also demonstrate the flow of content, conciseness, and readability of recommendations throughout to enable easy comprehension. And there will be appropriate cross-references to corresponding requirements and recommendations of selected international sustainability reporting frameworks. By leveraging on the ISR in conjunction with the guide and toolkits, we hope that PLCs can independently undertake sustainability reporting and reduce reliance on external consultants. The third resource is the Sustainability Explainer video series, which is a set of support tools aimed to provide practical and valuable guidance to PLCs in comprehending and implementing the required enhanced sustainability reporting requirements. Based on the content from the sustainability reporting guides and toolkits in the third edition, the series covers 8 topics. Chapter 1, the introduction of Bursa Malaysia's sustainability reporting requirement. In Chapter 2, you will find the sustainability governance and scope and basis of scope. In Chapter 3, materiality assessment. Chapter 4, management approach. Chapter 5, measurement of methodologies for indicators. In the next chapter, performance targets and performance data table. Chapter 7, statement of assurance. And Chapter 8 on Task Force on Climate-Related Disclosures, or TCFD aligned disclosures. Okay, as highlighted earlier, sustainability factors are becoming mainstream part of investment decision-making. There are increasing calls by companies to provide high-quality, globally comparable information on sustainability-related risks and opportunities. Additionally, there is also a strong desire to address the fragmented landscape of voluntary sustainability-related standards and requirements that add costs and complexity and risk to both companies and investors. In 2021, the trustees of the International Financial Reporting Standards, or IFRS Foundation, created the International Sustainability Standards Board, or ISSB, as a parallel board to the International Accounting Standards Board, or the IASB, to develop a global baseline for sustainability disclosures, enabling companies to deliver decision-useful, consistent, and comparable information to investors globally in a cost-effective and assurable manner. The ISSB developed its first 2 standards on the 26th of June 2023 after extensive feedback and calls for a common standard to disclose sustainability information, including climate-related risks and opportunities. The first 2 standards are the IFRS S1 on general requirements for disclosure of sustainability-related financial information and IFRS S2 on climate-related disclosures. Both S1 and S2 have received international support from investors, companies, policymakers, and market regulators, including the International Organization of Securities Commission, or IOSCO, the Financial Stability Board, and the G20 and G7 leaders. In Malaysia, the Advisory Committee for Sustainability Reporting, or ACSR, was then formed in May 2023 with the endorsement of the Ministry of Finance to assess the use and application of the 2 standards issued by ISSB, identify other supporting elements that need to be in place, including a framework for assurance and capacity building, and these collectively constitutes the National Sustainability Reporting Framework, or NSRF, for Malaysia. In light of the growing support and demand for the use of the ISSB standards, Alignment with these developments is exponentially crucial for Malaysia as an export-oriented country that is intricately integrated into global supply chains. Chaired by the Securities Commission with members comprising representatives from the Audit Oversight Board, Bank Negara Malaysia, the Companies Commission of Malaysia, Bursa Malaysia, and the Financial Reporting Foundation. The development of the NSRF is intended to cover 3 areas. Number 1, to improve the availability of reliable, comparable, and decision-useful information on material sustainability risks and opportunities of companies throughout the use of the ISSB standards as the baseline standard. Secondly, it is to enable the use of other complementary reporting frameworks, for example, the Global Reporting Initiative or GRI, to meet the information needs of different stakeholders, and lastly, to support availability and flow of sustainability information across the supply chain. The ACSR is also deliberating on the regulatory structure for issuance and oversight of the ISSB standards in Malaysia to establish the NSRF. It is anticipated that the legislative amendments, in particular the Companies Act 2016, may be required to enable adoption by both PLCs and non-listed companies. Bursa Malaysia will also need to amend the listing requirements to align the enhanced sustainability reporting framework with the proposed NSRF. Where necessary, relevant notice in terms of changes to the reporting requirements will be communicated prior to the effective date. Now, we strongly encourage all PLCs to please keep a lookout for announcements on the NSRF. Meanwhile, please refer to the website to access the consultation webinar, presentation deck, and the frequently asked questions. As a conclusion, we have 2 slides for you. Firstly, would be the easy reference. We have provided links to all the key information sources for listing requirements for both the main and ACE market. The resources, the 3 resources that I mentioned earlier, and as well as the National Sustainability Reporting Framework or the NSRF. Please do read them, as every PLC's context is different and there is no one approach that will suit everybody. While the guidance and methodologies are standard to ensure comparability, the output in terms of your sustainability statement is different for every PLC. In this second concluding slide, we wanted to share some key elements when it comes to a PLC's sustainability journey. We would like to stress that the preparation of your sustainability statement is a continuous process and should not only be undertaken in the 4-month period between your financial year end and the deadline to submit your annual report with the accompanying sustainability statement. PLCs will need to understand the landscape of the new requirements that will drive change in the scope of your reporting. You will need to understand when, where, and how it will impact your company and the wider group. It is also important to determine the informational needs and expectations of your stakeholders, as this will determine the data that you will need to prepare, as well as the comprehensiveness of your reporting. And stakeholders here will include not only your shareholders, but your customers, regulators, bankers, and so on. When it comes to data management, PLCs need to determine the most efficient approach, which takes into considerations systems, processes, and controls. You will need to establish a cross-functional governance structure to collect, report, and approve the data. Although the assurance is not mandatory now, PLCs are encouraged to assess preparation of data and documentation in a manner that can support assurance so that any issues that may arise can be rectified ahead of the assurance process. Last but not least, we would advise PLCs to see beyond compliance and make reporting part of your business processes. And in this journey, discover risks and opportunities that will drive your business to new heights. And with this, I conclude my presentation, which I hope will be useful in your sustainability journey. Thank you.
Thank you, Michelle, for your presentation.
Michelle, for your wonderful sharing. Now proceed to Q&A. For the first question, Task Force on Climate-related Financial Disclosures, TCFD, has been suspended. What are the changes to try and enhance the sustainability reporting framework, or should we wait for the National Sustainability Reporting Framework?
So a similar question.
TCFD has been phased out in many aspects. We will list the company is still required to comply with the TCFD.
So as now, as we mentioned earlier, sorry. As we mentioned earlier, the national level direction on climate disclosures, you can kindly refer to the Security Commission website for the national reporting framework for further announcements and updates. In terms of the rules on the listing requirement, the listing requirement remains as it is now, pending further announcement on the National Sustainability Reporting Framework. Okay. Second question is, would you share how the Bursa Malaysia listing requirement on sustainability reporting affects our participation in FTSE assessment? Would every main and ACE PLC receive rating from FTSE? We have assessed all main market companies in this June, and for ACE market companies will be completed by June 2025. The ratings for all main market companies is available on Bursa Malaysia's website. Okay. Okay, another question. Can a PLC request for an authorized user for access to the ESG reporting platform only? For now, once you get the link to the Bursa Malaysia, for the Bursa Malaysia link system, you will get access to everything and not only the ESG reporting platform, yeah? The next question is on Bursa Link platform. The unit for electricity is megawatt, capacity of electricity, and not megawatt hours. How can we convert to megawatt hours or megawatt? With reference to a query on the common indicator C4A, total energy consumption, kindly conduct the necessary conversion to provide data for energy consumption in megawatt. And in making the required disclosure in the narrative of the sustainability statement, the listed issuers are then given the flexibility to determine the type of information and methodology that should be included or applied to best reflect and enhance stakeholders' understanding of the said data disclosure and applicable to its own distinctive operating context. For example, you may also consider including megawatt hours in the narrative in addition to megawatt. Okay, another question is, where can we get detailed guidance of what is included in the common indicator to be reported, for example, waste management, and what constitutes total waste? So in here, as we mentioned earlier, you should refer to the third edition of our Sustainability Reporting Guide and Toolkits. It does give a methodology, provide methodology, as well as further references in terms of GRI or whichever. And after that, right, companies are given the flexibility to then narrate on what they have applied. So another question is the ESG reporting platform and the CSI solution launched by Bursa in June 2024, and whether they are the same. No, these are two separate platforms. As I mentioned, the ESG reporting platform is for companies to come in and key in the data for the mandatory common sustainability matters and indicators. Whereas for the CSI solution, it is for climate disclosure and carbon calculation and management of your supply chain. You can find more about the CSI platform from our media release. And another question is, when should we finalize the report in the ESG reporting platform? Is there a deadline for it? And is it okay so long as we finalize it before our annual report announcement? As we mentioned, the requirement for the performance data table is for you to insert it into the sustainability statement. So you will need to work backwards as to your internal processes. Every company would have different processes of the different timelines that you need in order to finalize your sustainability statement, your annual report, and then submit to Bursa Malaysia by the stipulated timeline. Okay, another question is, do we have to have our statement externally assured, or can we keep it to internally audited? The current listing requirement is for you to actually provide a statement of assurance. So number one, you need to tell us whether your statement is assured or not. So if you do not have any assurance, you will also need to provide a statement as such. If you have assurance, there are two categories. One will be on internal, by the internal audit, and the second one will be on external assurance. As I mentioned, please look at our sustainability reporting guide in terms of assurance, and you will see various scenarios and what are the statements that you can use if you do not have a statement of assurance, or if you have it only as an internal audit or external audit, or perhaps a combination of both. Okay, another question is the performance table is compulsory to be included inside the annual report or sustainability statement. And the question here is, without changing the template and data, can we use our own design of the performance table to be inserted in the annual report? As we mentioned, you need to use the performance data table that is generated by the ESG reporting platform. That is the only performance data table that is acceptable for insertion into the sustainability statement. If you want to do your own table, you can have it in addition to the performance data table, but that would be a duplicate and it may be confusing for the readers of your sustainability statement, yeah? Okay, there's another request to further explain on the National Sustainability Reporting Framework, whether this is some sort of system that is mentioned. No, so this is a national framework, i.e. it will be applicable for all companies in Malaysia, both listed and unlisted, all right? So it is like Bursa Malaysia issuing the sustainability reporting framework for public listed companies. This will be a framework for companies in Malaysia. Okay. Another question, how do we put the narrative relating to performance data table in the sustainability report? So you will have in your annual report a section called sustainability statement, right? That would be all the narrative pertaining to your sustainability disclosure. So if you have any notes you would like to explain in relation to the performance data table, this would be the narrative that we are talking about within the sustainability statement. Okay. Okay. So you are talking about what is the difference between main market and ACE market. I'm not sure what difference you are referring to, but in terms of the sustainability statement, you can refer to practice note 9 for main and guidance note 11 for the ACE market sustainability requirements. Okay. And I think we have pretty much answered all of the questions in its various forms. If you do not, if you have further questions to ask after this session, you may also email to us. We will put in the chat box, yeah, the email contacts that you can send to. Okay. Thank you.
Thank you,
Michelle, for
Michelle,
sharing.
sharing.
And thank you to all the participants who have joined us. Once again, we apologize for the technical glitch. And should you have further questions, you can email to Arvin Ho at Bursa Malaysia and Michelle at bursamalaysia.com. So thank you for joining. We hope to see you in the next webinar. Thank you. Goodbye.